as promised in our previous video where we discussed the potential for significant profit within the 4-hour time frame. Today's focus shifts to the broader perspectives of weekly and monthly time frames. We will delve into an analysis of the market within these longer time frames and elaborate on strategies for achieving a remarkable 33-80% return within the current week. So, without further ado, let's dive in. In the daily time frame, we anticipate price growth upon breaking the 66C86 level. Our purchase offer stands at 66786 with a loss limit set at 59700 and a target of 75,000. Turning to the weekly time frame, breaking the resistance level within the 67120 range signals long-term price growth. Our purchase offer is at 67120 with a loss limit of 58,000 and a target of 77,000. In the previous week's report, we noted the potential for price to surpass the orange point located at the 1 Fibo level and reach the red point at 1.618 Fibo following the established trend. As anticipated, the price progressed from the orange circle to the red circle, with the 1.618 Fibo level providing support as expected. Subsequent Fibo steps followed swiftly within the reporting period. Regarding last week's report, we highlighted the possibility of price overcoming the resistance of the orange line and reaching the 4.236 Fibo level. Indeed, the price surpassed these resistances, reaching the 4.236 Fibo level as mentioned previously. Our previous report outlined the cautious anticipation of the price crossing the orange dynamic resistance and reaching the red dynamic resistance. As expected, the price breached the orange resistance and reached the intersection of the 2.618 Fibo level and the red dynamic line. We also indicated the likelihood of the price reaching the convergence point of the orange static resistance and the upper Bollinger Band, advising cautious trend following. The price has now reached this indicated location, having transitioned from the lower bold blue upward trend to the green upward trend. It successfully overcame the resistance of the lower bold blue line, now turned support. The orange line represents the current dynamic resistance, while the red lines indicate subsequent static resistances. The pale blue line serves as the current close support. The lower bold blue, purple, and black lines, formerly resistances, now act as dynamic supports. Considering the price's return to the blue upward trend alongside the green trend, it's prudent to exercise caution in following the black trend. Black caution advises vigilance in price reduction and fixation, particularly below the pale blue, purple, dark blue, and black supports, risking loss of these crucial levels. The first point, a general point for all charts. On the right side of the graphs, you'll notice a number accompanying the remaining time of the current candle. This number mirrors the current price and is highlighted in green. Additionally, all static lines, horizontal, specified in the figure correspond to numbers seen on the right side of the chart. Each exchange may have different numbers, so it's essential to meticulously follow the principles outlined here on your exchange chart. The second point, at this time, in the depicted figure, we observe a support rally denoted by the blue circle. This rally comprises the accumulation of pale blue, static, purple, dynamic resistance turned support, and dark blue, also dynamic resistance turned support. The third point, at this time, should the pale blue static support falter, there exists nearby support in purple. Thus, exiting with a swing intention solely upon losing the pale blue support may not be advisable. The support following the pale blue line is the adjacent purple support. While the purple line is short, indicating a potential loss, The subsequent support is the bold blue line. This line spans a considerable distance and is deemed a long-term support, offering a higher probability of support. However, if even this support breaks, suggesting a breach of a longer-term support, consider swinging with the support of the black line, ensuring alignment with the trend despite the short distance between the bold blue and black lines. Therefore, for swingers, it's prudent to avoid swinging when the distance between supports is minimal. Upon entering swings, be vigilant of the subsequent support to avoid getting trapped. For long-term strategies, given their higher risk tolerance, they should contemplate the likelihood of price support across these various support levels. Exercise caution when all supports are compromised, black caution area. If we consider two trends, green and blue, in the current chart instead of the green corner of the previous one, we observe that the decline of the green trend halted after encountering the support of the lower line of the blue trend. Subsequently, the price surged following this support. During this upward movement, the price retraced to the bold purple line and rebounded, indicating that the previously resistant purple line has now turned into support. Reviewing past chart patterns, particularly at the location marked by the two black arrows, we note that the price surged after hitting the purple support, first reaching the orange line and then the black line. It's plausible that this scenario might recur, with the price potentially advancing under the support of the purple line towards the orange, red, and eventually black resistances over time. Considering the support accumulation of the pale blue line and the two pale and bold purple lines within the blue circle, the likelihood of price support reaching the mentioned resistances appears higher. Thus, adhering to the caution signaled by the purple line enables one to track the ascending trends of both green and blue, purple caution, exercise, caution, when reducing and stabilizing the price below the three pale blue supports, the pale purple supports, and the loss of all three supports. Regarding Fibonacci 3 matching points, a little further away, as long as the support of the 3.618 Fibonacci level remains intact, there's a possibility of witnessing the 236.4 Fibonacci level. For Fibonacci 3 points closely matched, as long as the support of the 3.618 Fibonacci level is maintained, there's a possibility of reaching the 4.236 Fibonacci level. In summary, previous charts advised following specified precautions to align with the upward trend, suggesting the possibility of price surpassing the orange resistance and reaching the red resistance. Purple caution, oscillating. Exercise caution, when reducing the price and stabilizing it below the two pale blue and purple supports. However, consider the potential for price support when dealing with the bold blue line. Blue caution, midterm. Exercise caution when reducing the price and fixing it below the two robust blue and pale blue supports, and be mindful of the risk associated with losing these supports. In the chart below, the upward movement of the candle at the end of this period transformed the orange static resistance into pale blue static support. Additionally, completing the pullback to the purple line and crossing it turned the purple dynamic resistance into pale blue dynamic support. Given these changes, can we anticipate a similar shift in the remaining time of the candle, akin to the two changes observed in the past? Regarding Ichimoku, the current charts, preferably ranging from 4 months to 3 days, exhibit no signs of decline. However, an important note about Ichimoku is detailed on the following page. In the previous reports, number 55, the only suspicious Ichimoku signal was associated with the 3-month time frame in the figure below. Accompanying the upward trend, caution was advised considering the remaining time of the candle in the lower time frames. Following the trend of price increase, the 3-month Ichimoku now appears as follows. Based on the specified Fibonacci levels, once the resistance of the 1.618 orange Fibonacci level is breached, the price holds the potential to reach the 2.6618 black Fibonacci level, indicated by the black arrow.